Hey guys, how's it going? Hope everything is going well. Alright, I want to do this video. I have to do it twice. Some technical difficulties on my last video, but I'll do it again. Anyways, S&P 500 right now is what, 270.80 or 2,780 around there. It's been going up. We're not at all-time highs yet. But that being said, there's a lot of optimism in the market. You saw the second highest weekly tech inflows, and the VIX is at 12. Remember, I did an article in Seeking Alpha, and I did videos saying reversion to the mean should happen in the VIX over here, right? There's a lot of fear, a lot of pandemonium. Media was talking about it. Everyone's saying stocks are crashing, but this is the perfect time to actually just short the VIX. And I didn't expect it to be as great of a trade as it was because fears about North Korea and Trump. But those fears have temporarily subsided. And right now, we have a few events coming into next week. It can be an excuse to sell off. You see the FOMC on the 13th. You have Trudeau. You have G7. You have Trump meeting about trade. You have the Trump and Kim summit, North Korea summit. Hopefully that goes well. It may be an excuse to sell off. Whatever the reasoning may be, we have to look at it from this perspective. VIX is now 12. You're seeing inflows into the market. And it just seems that we need to pause. But that being said, fundamentally speaking, the economy is still strong as of right now. We have a positive sloping yield curve. Right now, the 10-year is at 2.93. The Fed funds rate is at, or it will be at 2% in the next few days when the FOMC raises the Fed funds rate 25 basis points. So we're getting closer to an inversion with the Fed and the 10-year, but we're not there yet. And because of the tax cuts, because of inflation not out of hand based on the way the government's calculating, based on corporate profits, they're not getting affected negatively. I expect the stock market to go to all-time highs, despite all the negativity we saw in February of this year. And people may say Federal Reserve artificially inflating the market. Oh, yes, it definitely has. I used to talk about it all the time. But that being said, a few technical analysts are calling for S&P 500 3,000, like the ones from Painescapital.com, which I showed you earlier. Another technical analyst, Adam Mancini, he's expecting a pullback right now as well as Painescapital.com. His arrow shows he's expecting around 2070.40 or 2740. It could be an excuse once again with G7, Trump, North Korea, FOMC, whatever it is. Profit taking needs to take place, in my opinion. I took some profits earlier this week. Some of my spider positions, some of my options in the futures markets for the spiders, not spiders, but S&P 500 E-mini options have closed out. I'm going to get back in if volatility expands slightly, right? You want to sell options when volatility goes higher, and don't sell options naked unless you have the capital to back it. That's just the rule of thumb, and they're always risky. So just keep in mind that, because a lot of people got blown out in February of this year with that volatility spike. So that's just one thing to note. But I expect markets to still go to all-time highs because simple fundamental fact, yield curve is positive, right? Just keep it simple. I will do some more videos on just earnings and the stock market in general, top line versus bottom line. I did a presentation at my old firm, and my boss told me just to do a presentation before I resigned from there, because this was my interest. Even though I was an accountant there, we just had a portfolio of companies that we managed, and some of them were publicly traded, so he wanted me to do that as a farewell and just to give everybody a hindsight of how the system works, right? I've learned from my failures. So regardless, I wanted to look at gold. I talked about the magic number for gold is 450,000 contracts for the open interest, and this is right now I'm at the CME. And when I see not that much interest, comparatively speaking, a few years ago it was at like 445,000 contracts. I didn't pay attention to open interest back then, but as soon as I've gotten that data and information, where hedge funds aren't really interested in buying gold right now. Searches on Google are all-time lows, or not all-time lows, but 11-year low. So when you see something like that, when you say everyone can get onto the Bitcoin bandwagon, this, in my opinion, is a reason, in my opinion, to be bullish for gold. And I did a video when open interest was at 512,000 contracts, and gold really went nowhere in that range. We may see a slight sell-off next few days because of the FOMC's meeting, right? Because the thing is, rates go higher, they front run it, right? And the dollar goes up. But now, after that, I expect gold to go higher, and the simple reason is open interest is at low levels. And what I did this past week, when I saw open interest go to 455,000 contracts, I bought a 12.95 put in the futures for July, which expires in about 2-3 weeks. And I bought an August futures contract at 12.95 as well. And basically, or maybe 12.97, I forget the price. Long story short, I expect gold to rise in the coming months. If I'm wrong, then my put option saves me from a tremendous loss, because gold is volatile. So if it drops, it's going to drop maybe like 30-40 bucks, which is what, 3-4 grand, which I don't want to lose that. But in the grand scheme of things, I expect it to go higher later this summer, and hopefully the open interest provides a telling sign again, and the hedge funds are going to chase this thing higher. When the hedge funds start chasing, I'm probably going to take a profit and then maybe get back in at a lower price, assuming that the fundamentals are sound for gold. But regardless, let me know what you guys think about the S&P 500, about gold, and I'll talk to you later, guys. Thanks. Bye.